everyone, and welcome to our first Power Talks of the year. We are so excited to have you here. Can you believe we're already at almost the end of February 2026? Today, we're going to be talking and speaking a lot about how to invest in properties in the United States. This is a topic where a lot of people go, I don't really know how to go down this path. I don't really know how to navigate the system. Well, here with us, we have two amazing professionals who are going to take a look at that and give you the insights you need on how to navigate it, how to make sure that you're successful in the process, what forms you need to have, as well as how to introduce you to the marketplace and that you are safe and secure. With me today is Perez. He is the VP of Compass Real Estate, and I could tell you, I see him here every Wednesday, and he is a rock star. He knows this market inside and out in the United States. I think he's got some secret great properties out there, but he definitely takes care of his clients, and he makes sure that they know what they need to do, because this is a scary process, right? You're investing a lot of money, and you're investing in your future home. Additionally, we have my colleague and friend, Paredes. Him and his team really know all about lending. How are they going to put you in the house with the best price, with the best down payment, and with the best rate, of course, at all times? So without much further ado, I'm going to introduce Andre to the stage. He's going to take you through his presentation. Welcome.
Thank you so much. That's an amazing presentation. I appreciate you, and I appreciate all the audience, and of course, to all of you guys for having me here today. Today, we're going to talk about the current state of the market and my humble predictions for 2026. As you all know, no one can tell with precision what's going to happen with the market. No one can tell with precision what's going to happen to the rates. But information, data, can give us a very good idea of how 2026 is going to develop. So the name of my presentation is Real Estate Market Trends and Humble Predictions 2026. Before we go on, just wanted to introduce myself. My name is Andre Perez. I'm Vice President and Associate Broker with Compass. We are #1 brokerage in the Washington metropolitan area and the nation, and very soon or already around the world. So you guys will be in very good hands. We have been practicing real estate, or myself, been practicing real estate for nearly 28 years. So you have all of that experience, of course, at your disposal. I'm sorry, I forgot to change the slide, but here we go. That's my information, and I'm going to give you all my contact information once we are done with this presentation. So 2026, I would say, is the healthiest year in nearly 3 years, since 2022. And why do I say healthiest? Because in the past few years, we have to have an unbalanced relationship between demand and supply. A lot of people have wonderful interest rates, wonderful mortgages on their properties, 2, 3, 4%, and that has created an issue with inventory. To give you an idea, in order for us to have a healthy market in the industry, we need to have about 6 million transactions per year. For the past few years, we have only had about 4 million transactions, and that creates a huge deficit. Imagine that you have 6 families that needs to move, and these families have kids, a dog, and a lifestyle that needs to continue its trend, right? What happened when you only have 4 properties for those 6 families? Well, you're gonna have 2 families that will be very, very unhappy, right? And that has created a market that was in favor of the sellers. Now, 2026 is going to be the year, in my opinion, that is going to create a more balanced market, an arena that has enough more inventory and to basically ease the demand. So 2026, it's a market that has rates of somewhere around 6 1/8. If we put all of this in perspective, a year ago, rates were about 1% higher than what they are now. And all those buyers that were on the fence, right, sensitive to interest rates and mortgage payments, are finally out hunting for a property. The problem is that we still don't have enough, and we're going to talk about that in a little bit later. On the positive news, we have about 8.7% more inventory this year, 2026, compared to 2025. So in 2025, we had an increase of listings of about 30%. This year, we don't have that 30%. We were expecting the inventory to go up and up, but regretfully, it's not the case. We're down to 8.7%. That is encouraging, but not necessarily encouraging enough to take care of the supply issue. But also, home prices. What we have seen is that over the years, home values have gone up and up and up, and sometimes in a two-number digits. And that has created an issue. That has created the issue of affordability. We expect 2026 to be a very flat year as far as home values or prices, right? So that we can somehow manage the affordability issue. Now, mortgage rates. If we look at mortgage rates historically, since January 2023, you will see that we are back to the lowest rate in nearly 2 years. That's encouraging. Remember, about a year ago, in January 2025, we were up there, somewhere around 7%, 7.125. So that has created a status where we have more normalized rates. I don't think we're going to ever see, well, in our lifetime, I don't think we're going to see interest rates go down to 2%, but hopefully I am wrong. In my expert opinion, we're gonna see rates somewhere between 6 and 6.5 for the remaining of the year, and that will create a very healthy market. Now, home sales have shown an increase on pending transactions of about 5%. That creates a little bit of growth, not substantially, but it is growth. At least it's not a decline, right? When we look at home prices, we've seen that the median price has increased in 2025 by only 1.7%. So, in the following chart, I'm going to show you how much homes or home values have increased over the past decade or two, so that you can appreciate what a 1.7 really means for all of us. And another important factor is that sellers out there are now adjusting their prices. We have about 32% of the listings that go to market that go through one or more price adjustments in the life of the listing. This is the long-term appreciation chart, which I really want you to put attention, because if you see how much properties have increased since the pre-pandemic years, 2019, we can see that home values have increased over 53%. So whoever had a house that was worth $1 million in 2019, chances are that that property is now worth about $1.5 million, right? That is substantial. That's why long-term appreciation is what everyone looking to purchase or sell a house have to focus on, right? Real estate always beats inflation. If we look at numbers in 25 plus years, we have seen that home values in general have increased almost 180%, while inflation in the same term has only increased by 86%. That means that home value, long-term appreciation will always beat inflation. And that's why a lot of people focus their investments in bricks and mortar. That's why I do what I do. It's a great real estate investment, particularly when you are planning to occupy the dwelling as your primary residence. It gives you tremendous lever. It gives you a tremendous comfort, and it helps you secure your investment in a very safe manner. This is the economic uncertainty chart, which basically shows you, uncertainty factors. Who created this? I don't know. What the formula is, I don't know. But this is the economic uncertainty index. As you can tell, the uncertainty levels are down, but still high compared to the historic data. April 2025 was the peak, and that was perhaps because of all the changes in the current administration policies. that affected the nation, but particularly the Washington metropolitan area. Why? Because we were at the epicenter of massive layoffs and changes of policy and the tariffs and all of that. So it's getting better, but we are far from being at a normal level. What changes uncertainty? Well, many factors. It can be politics, it can be changes in our international policy, it can be tariffs, it can be leadership, it can be elections. There are so many factors that affect uncertainty levels. Now, we're going to talk about the inventory. As I told you before, we had about 8.7% more inventory than the previous year. Last year, we had about 32% increase of inventory compared to 2024. Currently in the nation, we have about 691 total active listings. So that's good, but it's not necessarily at the level where we want to be. And I'm going to answer your question in just a minute, okay? Now, population. We all know that we need to constantly grow the population in this country or any other country, right? We have had an issue with population, and the population only increased by 1.8 million people in this nation, coming from 2.7 million in the previous year. And that is associated with the fact that we have new immigration policies and a lot of people stopped coming to the country. Also, you can see the states in red, like California, and a few other states that have lost population, and where all that population have migrated is to states like Florida and Texas. And we're gonna see that in this chart. This shows the last period migration patterns. And as you can tell, cities like New York and California have decreased their population, and players like Florida and Texas has gained tremendous amount of migrants. So Washington, D.C., to give you an idea, is very close to being the red. And why is that? Well, we probably know because the political climate in the past few years, right? Now, some important numbers that we need to keep in mind is that the median age for home buyers have increased to 59 years. That is dramatic because in 1981, it was 31 years, right? Also, 61% of the 8% of the buyers are 8% of the buyers and 11% of the first-time home buyers were born in a foreign country. Why that's important to us? Well, at IDB, we have a lot of members, right, who were born in a different country, right? A lot of G4 visas. So that's a good number for you guys to keep in mind. And we have about 26% of the buyers out there purchasing property in cash. That's an all-time high, because if we compare that to 2003, we only had 7% of the buyers purchasing in all cash. That's a drastic change to 26%. The average age of a first-time home buyer in the US is 40 years old. So if you are under that age, hey, you have the opportunity to beat the market, right? If you are above that age, perhaps it's time for you as a buyer to catch up. This chart, it shows what is important to today's buyers. What buyers are now looking for and what sellers should pay attention is that buyers are putting a lot more attention to a quality of neighborhood. There is where the trends are going. As a buyer, you have to make sure you focus to purchase in an area that it has transportation, development, employment opportunities, and so on. Staying close to family is important. But you see, affordability is not the number one, right? Everyone would, guess that affordability is far more important, but no, location. That's where people are putting their attention. So in general, my humble predictions are that this year, we're gonna see a year of flat home values. That is good for buyers, and that is actually good for the economy, because we don't wanna have an economy where home values just continue to go up and up and up every year. We want to make sure that we have a balanced market, so that gives more opportunity for new buyers to acquire a home. And also, an opportunity for buyers to catch up with the obligation of a mortgage, the cost of a house, right? Affordability. We also gonna see rates, and Marco, you probably will agree with me, somewhere between 6 and 6.5, and believe me, that is an amazing rate. I have seen much worse, and I have seen better. But 6.5, 6% is an amazing rate, and I'm talking about rate for the traditional banking out there. You guys have something far more beneficial. You have something far more robust and economic, which is the interest rate offered by the credit union. So my recommendation is for you guys to take advantage of all those benefits. Once again, my name is Andre Perez. I'm with Compass, and I have been serving buyers and sellers in the entire Washington metropolitan area for nearly 3 decades. But I had the privilege of serving IDB employees and members of the credit union, and I cannot be more grateful of the opportunity to serve you all. And I'm gonna answer questions that you might have after Marco's presentation. Okay, thank you.
Thank you, Andrew. I appreciate that.
Yes, sir.
And thank you for the outlook on the trends on the market. Really. Well, my name is Marco Paredes. I'm the Chief Lending Officer from the IDB Federal Credit Union. And we're just going to be talking about lending perspectives and just these talking points. But the key here is preparation is your competitive advantage. The window is open. Basically, we are already in February, middle of February 2026. The strategy market is basically what we are going to see on this year. So the frenzy markets or high, concentration markets are not, anymore. Mortgage rates are going to be stable, as Andre shared with us. We're going to be between 6 and 6.5% on the 30 years fixed. But it doesn't count the ARM or the adjustable rate mortgages that we offer as well, which are below the interest rate between 6 and 6.5. We're starting maybe at 5% on the 5-1 ARMs. So I support that you guys check on those particular products. Home prices are going to be pretty much flat, as Andre mentioned. We're going to be between 0 to 2% increases based on the forecast on several sources. Inventory is growing slowly, but balances are going to be pretty much very balanced. And the buyers and sellers is more even footing, means that it's going to be 50-50. It's not a sellers or buyers market. What is this means for you guys? Advantage goes to the prepared borrowers. Prepared borrowers are stronger negotiators. So if you already have your structured loan, reduce the long-term cost for you. Flexibility, reduce the payment and timing risk. So you need to be open for the products that you are going to be selecting to purchase the properties. Liquidity planning matters and more than rate chasing. So if you're looking for the 0.25 or 5% or 50 basis points below market, so that's not a really good structure or planning for purchasing a property. So IDB Global Advantage, what it means for you guys this. So we don't do just approving loans. Basically, we design loans. We design loans based on the structure of the membership that we have. So we have our adjustable rate programs. We have fixed rate programs that we offer, but we also have the blended program that we offer for the members that already have a loan with us. So we build the programs based on our community and our global membership. The experience of the team that support you guys here, the lending team, knows really well the income and the documentation that you're going to need, the portfolio flexibility that we have. So 50% of our portfolio is adjustable, 50% of our portfolio is the interest rate is fixed. So we close normally in 30 days, so it's a speed there, reduce payment risk, plan basically across the border. So financial strategies, so if you're thinking about buying a property today or during this year, basically I recommend you to check the ARM or adjustable rate strategies to see if it aligns with your horizon. Normally we have members that are going to be here 3, 6, 10 years. So basically these particular products, which are 5-1, 7-1, 10-1s, are going to be an opportunity for you guys because they are going to offer a lower interest rate. The recast option, if you already have a loan with the credit union, we offer a recast option. Basically, if you have $50,000 that you receive, I don't know, for a bonus or an incentive or anything that came, you saw another property outside of the country and you want to bring that money and reduce your monthly payment on the mortgage, you can do that with the recast loan option that you have with the credit union. The blended rate, this is a new product that we launched last year. So where if you already have a 3% or 2.5% or anything below 4%, we're going to combine the interest rate that you have right now. And if you want to buy a new property, we're going to check the new rate on the product that you had. Let's say that you had a 5-1 ARM and you had 2.5 on the initial program. Our rate right now is 5%. Basically, we're going to blend that interest rate and we're going to give you a rate below market. Maybe it's going to be 4.5. It depends on the structure of the loan and the balance of the loan. Low down payments, we start at 5% down. It depends on the structure of the loan. Normally, it will be with mortgage insurance, but can go from 5% up to anything that you want to bring to the table. And if you have already a property and you're thinking about buying another property or reinvest the equity of your property, I recommend you to check into the HELOCs that we offer because that's cash. It's a second wallet that you're going to have that you can use at any time immediately to purchase an investment property, maybe if you're looking to diversify your real estate portfolio. Global members advantage. Other lenders are going to be seeing complexity because the type of visa, G4s or no credit. So they're going to try to put you in a high interest rate or maybe they're going to say no. But we know the structure, we know our members. So if you are thinking about buying a property in the US, especially for the members that are outside of the country, living in a country office or working on a country office, and their family members that want to reinvest or invest on a property in the US territory, they can do that with us. So if you are working in Bolivia and your family is interested in buying a property in Florida, you guys can do that with the credit union. So we know already the international income, the documentation expertise, and the only thing that we need to do is just plan ahead and work on the structures that are going to be benefit for you to buy the new properties. Which lane are you? Basically, the first thing that you need to do is in 2026, we need to get pre-approved. Now, so if you're already looking into the next 6 to 12 months, please just get pre-approved. Come to the credit union or go to a lender that you prefer and just get a pre-approval letter just to see the structure of the loan that you guys are going to get before going out and look for a property. Moving up, maybe you are thinking about buying a new property, but you're not doing it because you have those 3% or 4% that Andrew was mentioning. But people is just looking into, should I stay? Should I wait? I was just mentioning before the blended program. So we have that blended program that is going to be a rate that we offer you below the market. If your loan is in our portfolio, we're going to be able to offer you that type of structure, and this is going to help you to reduce the interest rate that we currently offer on the regular market. Now, if you're staying put as well and you want to optimize the equity of your strategy, basically a HELOC, it will help you do a renovation or kind of a consolidation of debts if you want to stay there. If you are living overseas and you want to buy a property, well, basically begin sending documentation and planning ahead with the lending team. Cost of waiting basically is inventory. No, so if you stay, looking for properties and maybe it's not gonna be showing up the perfect property, maybe you're gonna have or you lose the opportunity. The rates are gonna be changing, going up maybe. The negotiation power, it will change because obviously if rates change and your borderline and your income or equity or assets that you have are just a borderline, maybe it's going to reduce the amount of money that you're going to be able to qualify. But you need to be prepared in order to get out and try to put an offer. This is a balanced market, as Andre mentioned before, and balanced markets are not the same forever, of course. So if your next steps are going to be basically just review your lending strategy. So prepare for a pre-approval, just do an appointment with the lending team. And for our members that are overseas, global members, just planning consultation with the lending team as well. So you can just scan the QR code and you're going to be able to work with the lending team for any potential consultations that you want to do. So I believe that we received some questions about what's going on the market. Should we wait to drop the 6%? It depends, really. So it's a very stable market. You're going to see on a 6%, 6.5%. We are already mentioning. I don't think that we're going, back to 3 or 4%. So my recommendation will be just check the structure or the type of program that you're going to be, using to purchase the new property. Are we expecting a housing correction? I don't think that it's going to be a correction. It's not 2008 that it was a situation here in the country. So it's a very stable, very balanced market. If I live overseas, can I really finance a property in the U.S.? The answer is yes. With the credit union, if you're a member already of the credit union, we can offer you a mortgage loan to purchase a property within the U.S. territory. Is an ARM risky right now? It depends. To tell the truth, 55% of our portfolio is ARMs. So, adjustable rate mortgage. It's a variable rate mortgage. So this it will be a 5-1 ARM, 7-1 ARM, or 10-1 ARM, amortizing on 30 years, 20 years. It depends on the structure, but the interest rate will be fixed for 5, 7, or 10. No, so some members or the regular market or the U.S. market citizenship, they usually use a 30 years fix, which is a high interest rate. We're talking about 6.5. Between 6 and 6.5. No, so if you're going with a 5-1 ARM, maybe you're going to be close to 5%. So it's a big, chunk of rate that you're going to be saving there. Should I put 20% down? It depends on your liquidity. So we start at 5%. It depends on obviously the FICO, so all the qualification in order to get there. But we offer you a minimum of 5%. But it depends on how big is the loan and the structure that you want to have. An investment property is still a good idea. Yeah, this is a balanced market, really. So rates are still, good. For example, on the 5-1 ARM, amortizing on 30 years, we're going to be on an investment property in 5.75, which is a very strong rate for that particular type of product at 80% LTVs. And that's pretty much it, what we have. But we're open for questions and have, more details.
Question, right?
Marco, you did have a question, right?
I'd like to know if you have any information about the DMV in terms of housings, also availability.
Sure. You want to go first?
Go ahead.
Okay. Well, in general, the Washington metropolitan area is doing really well. It's been very stable. Condominium property are struggling a little bit. And that started after the pandemic started. Single families in the suburbs, not everywhere, but areas like McLean, Falls Church, Alexandria, Bethesda, Chevy Chase are booming. Those properties are flying off the shelf. And we don't know if that's the way going to stay throughout the year. Maybe it's because we had a short supply because of the snow that we experienced recently. That could be. Hopefully the inventory will open up so that we stay, in a more balanced market. That's what I hope for 2026. Yes. And something I wanted to add.
Sure.
One of the questions was, should I wait until rates come down to 6%? My recommendation is always the same. Time on the market will always beat timing the market. What I mean with that is that if you purchase and you spend time with that property, 7, 8, 10, 15 years, you always going to be in a better position than someone who is getting ready, timing the market. Because guess what? Time will pass by and they will never jump in on time. So time on the market always beat timing the market. If we look at extremes, I want you to look at the following extreme scenario. Even those that purchased at the peak of the market in 2025, 6, and 7, over the last recession, right, that paid top dollar, are doing exceptionally well nowadays. How many years later? That was 20 years later. They're making money. The ones that pay the most, the one that purchase a home at the very peak, are now making money. So my recommendation is do not wait. Get your application in. Remember, getting pre-qualified, getting ready doesn't cost a penny, right?
Sir.
Great, thank you for that. So I do want to let everybody know, if you're on LinkedIn Live and you're virtual, please put your questions in the chat so we can answer them here. And of course, anybody here, please raise your hand. Then I also wanted to say there's a lot of information that Marco provided regarding a lot of the different types of loans. It's really unique to everyone's case, what they're dealing with, what they're working with. So please make sure that you come in, because we can definitely break it down for you and provide you the scenario that you need, depending on your situation. So I did get one on LinkedIn. Marco, this one's for you. How much money does one typically need to buy in the current market as a first-time home buyer?
Well, it depends on the program. Obviously, the FICO qualification change for each person. The minimum down payment that we require, let's say that you already have the FICO scores over 60 and you want to put 5% down, which is the minimum that we require to do that. Also, you're going to need your down payment. Down payment is going to be 5%, plus your closing costs are going to be around 3% of the purchase price. So if we're talking about a property of $250, pretty much you're going to need around $12,000 average on that type of transaction. But more than happy, if you want to do an appointment, we can go over the scenario and check what you can qualify for, and I'll give you more detail on the amount of money that you're going to need to purchase the property.
Thank you. Any more questions here within the room before I go to another virtual one? No? Okay. I already bought my house and the rates decreased. What are my options? Is it worth refinancing at this moment?
The rate decrease? Okay, so if they already bought a property,
And the rate decreases. Suppose the rate does decrease.
Yes, so let's say that you already bought your property and the interest rate is 6% and you bought with an adjustable rate mortgage, we can refinance your property and reduce the interest rate. Basically, that's a rate and term refinance type of structure. So that is not a problem. Just schedule your appointment with the credit union and we're going to be able to help you provide, the interest rates if truly first makes sense or not to refinance. So that's the idea.
And for those of you who are wondering, how do I make an appointment with the credit union? You can go online and you can make it a virtual one, or you can come here into the branch. So we try and make it easy for you, no matter where you are in the world, because there are people internationally who are looking to purchase in the United States. Are there? Yes, please. Can I give you this microphone?
Sure.
Hi, my name is Martin. A quick question. Is there something we as expats should take into account when considering at some point selling a house, tax-wise or otherwise closing costs?
So your closing costs will be pretty much the same as anyone else. But if you are a G-hold visa holder and are considered a foreign national, right? You will be subject to a FERPTA tax withhold. I'm not a tax expert, but The tax withhold is about 15% of the gross sales, right? That goes into escrow, either with the IRS or the title company, so that you have the opportunity to file your income taxes, your profit and loss. So and that money is utilized to pay for whatever profits that are subject to taxation, right? Because foreign nationals are foreign nationals, the IRS wants to make sure that the money is in escrow so that they can, somehow pay what they have to pay. Yeah.
Just to add to that, per experience, basically in our portfolio, the way we see it is, so if you're thinking about selling the property within the next 6 to 12 months, so make sure that you already have your letter that says that you are tax exempt and that you find a settlement company that knows how to work on that. We do have a few companies that we can provide information with, and they know how to manage the tax exempt to avoid the capital gain. So you need to work on this ahead of time in order to make those things happen.
It's a matter of preparation and strategy, but it's not a complex process. You just need to be proactive, when it comes time to sell. Yeah.
Don't wait on the last minute, 3 days and selling. Yeah, that's where you're gonna have the challenge.
And these events are, the events that will keep you informed, right, about what to expect. A lot of people don't realize that they are subject to tax withhold until after they close, right, or at the time of settlement. Right.
Yeah, but for our people that is, outside in LinkedIn on the live event. So if you're a G4, make sure that you prepare ahead of time for that particular purpose. Yeah.
But we do it all the time. No problem.
Actually, Andre, this one is for you. And you spoke a little bit about inventory, right?
Yes.
Where we are. Is it possible? What are your predictions for the next couple of months regarding inventory?
I wish I had a crystal ball but what I can tell you with absolute certainty is that people have been holding on to their properties because of their amazing rates. But nature is nature, right? There are certain events that you can delay a little bit, but they will continue to happen, right? Death, divorce, kids going to college, you name it, right? So yeah, you can love your house, you can love your rate, but then, lifetime events will hit you. And you're gonna have to let that 3% go away, right? Now, the credit union has, and this is in a separate topic, but the credit union, for those who are holding on to their rates and not making a move because of their existing mortgage, they have a product for that. They have this amazing product where they're going to blend in the current interest rate with the new mortgage rate and come up with a special offering for you so that you don't have that sticker shock when it comes to getting a new rate. Take advantage of that. I always like to say this. I am not a credit union member. I wish I had an account and the opportunity to get a mortgage with them, because the rates, the programs, the pricing, the relationship, you're not going to find in the traditional banking out there.
Yay, thank you. Everybody
It's
applause.
saying that, and I really want people to listen to this. I wish I had it. I don't. And for those who have the opportunity, take advantage of it.
Can I add to that real quick?
Yes.
I think a lot of people don't know is that if you are currently a member, your family members can also become members. So I want to make sure that we highlighted that point, because why not extend that benefit of membership
Of
and
course.
be able to qualify for the products and services that you need?
So who wants to become a family member?
I just want to.
Oh, do you want to be my brother? Yeah. Do we look at
I want to
the
talk
family?
on the previous question about the inventory.
Yes.
So do you see a difference between 2024, 2025, and this current
Well,
market?
yeah, I'm sorry. I kind of derail of the original question.
Yeah.
I show you in the graphs that last year we had 30% more inventory than 2024. And that was great. We were extremely happy because the trend was heading that direction. This year, kind of like slowed down. The increase of inventory between the previous year and this year is only 8.7%. Now, it's too early in the year to tell. We haven't even finished up the first quarter. It could have been because of the snow. And because of the storm, I should say. And why do I say that is because in the other coasts where they didn't experience snow, the numbers are still, okay. We just had these weird numbers because of the storm. We were dealing with snow for nearly 3 weeks. And before that, of course, was too early in the year. People were just warming up, right? But I think inventory will open up and more inventory will hit the market. Yep.
Are there any questions here internally? Because I don't think I have any more online. Okay, I do want to say another thing before we go is that we do concentrate in Maryland, D.C., and Virginia, right? We have a lot of properties here. But Marco also, if you're looking at investment in any other state, Florida, I don't want to say all the states, good on Texas.
We were recently up in Texas, so that was a really nice, option. But if we don't have it on the list, basically we will review. Just come to us, send us the information, and we will review if we can do that state specifically. But right now we have around 20 states so far.
Sorry, in other countries too? Which one? Other? Brazil?
Oh, other countries, no.
Yeah, unfortunately, we cannot do other countries. We only can lend on the U.S. territory because we are regulated, financial institutions are regulated in the United States. Yeah, and we cannot perfect a lien outside of the country.
Yes, please. Here, let me get it.
We're thinking, hi, if we're thinking about investing, for like a property for investment, like do you have an average vacancy rate? Like let's say we want to rent an apartment like in the DMV or in DC. Like what is this?
That's a good one for you.
When you're making an investment, your number one, the number one concern should always be location, right? So well-located properties that have access to transportation and good economics in general will typically experience vacancy a month every time you switch tenants, sometimes less than a month. In most cases, it's going to be just a couple of weeks every 2 or 3 years. But they are typically occupied for terms of 12, 18, 24, 36 months. So vacancy rates are very, very minimal.
It's manageable.
And it's calculated in the return on investment.
That's a great question, actually, because I'm sure that's a big concern.
It is.
Any other questions here before I close out? Okay, so a couple of things. I do also want to say for Marco, if you do have a social security number, he does do a credit report. So make sure that you want to be able to know what you're qualifying for. And then some housekeeping items. We have a 13-month share certificate right now, and that promotion ends on Friday when you get one free, penalty-free withdrawal. So make sure you get that share certificate in tomorrow before midnight. Additionally, we have amazing realtor office hours here every Wednesday, 12 to 2, I believe. Camilo and Andre are here, and then you can have them anytime during the week. So if you can't come to the branch, just go ahead online and book your appointment. And then the last thing I want to say is we have 2 great webinars coming up next week for G4 visa holders and taxation, U.S. citizens and green cards. I'm sure that's a big question. Taxes come up a lot, and we don't really like those things, but it's a fact of life, right? So we have amazing webinars regarding that. And then the last thing is we have upstairs next Tuesday, we're going to have a table event. So those of you who are runners, walkers in the DMV area, we're going to be raffling off a walk to the Cherry Blossom Festival. So a lot of great stuff. Go look at your email. Make sure that you have the email for signing up for the webinar. We have a lot of interest in that, and we have some great presenters who can go through all that tax stuff. So I think that's it. Those are all the housekeeping items. Thank you for those of you who came and joined us via lunch. Those of you who are at home, I hope you had a great, yummy lunch, and we look forward to seeing you soon. Ciao, everybody.